Good morning or good afternoon, depending on where you are located. Let me get, okay, good. Make sure that's on right. And there we go. Sorry for a couple minute delay. I had to, if I blink a little bit, I had to put some eye drops in. I'm getting old. My eyes are giving out on me. For those of you that are in patterns of flash, if you've seen the pattern of the week, the last couple of weeks, I've had to wear my glasses because my contacts, I'm having dryness issues and it's weird. It rotates from one eye to the other, but anyway, you don't care about all that. But if I'm blinking a little bit heavy, then that's why I just put eye drops. So I don't have any issues. So my contacts are good. Anyway, welcome out to Trading Coaches Playbook. How y'all doing? You can hear me, I assume. Oh, really? Interesting. Huh. I'll have to ask. I think I'm supposed to go back to the eye doctor again. In a couple of months. I can't remember. I might have to try that. I don't know. One said something about allergies, so I've been taking it. People have talked about allergies for years, and my doctor said, "Well, try this and see." And it's helped a little bit. So we'll see. We'll see if that keeps going. And anyway, so it is kind of nice though not to have glasses on. It's even though I don't mind wearing them. Usually I do when I'm trading anyway because I can see the screen better, and it's not as just easier. But when I'm doing this or the sun's out and I got to wear sunglasses, it doesn't work well. So anyway, so let me get the disclaimer out of the way. I'm not a registered broker dealer investment advisor. I will not give you any recommendations or advice. Everything we do here is purely for educational purposes. If we do talk about trades, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading here. So quick review of all the stuff that's coming up. Inner Circle is that is Monday, I believe, right? The 16th is Monday. And then Trading You is the 26th. I believe that I'm doing that one. Looking real quick to see. 26th or 25th. Actually, I'm glad I looked that up. I am pretty certain, just in case, be a little vigilant. That's a couple weeks out, but I'm pretty certain that's supposed to be the 25th. I just got an email yesterday asking to shift from the 26th to the 25th. So if we can maybe get some confirmation on that, that is accurate. I believe it. Where did that chat box go? I believe it's going to be on the 25th. So maybe we're doing back-to-back nights. I don't know. All I know is I'm doing it on the 25th. So then Patterns of Flash with yours truly, Monday night. It will be changed to the 25th. Okay, thank you, Lee. So Trading You is going to be the 25th at 8 p.m. So same time, just a different date. It's going to be on Wednesday. Like I say, Patterns of Flash is Monday night. That's with me. So if you have a subscription to Patterns of Flash, that's going to be a 1-hour live class, kind of like we're doing here. Usually I cover something, typically a pattern, specific pattern. But sometimes there's not a whole lot of patterns happening right now. There are, but with the market tanking like it has, they're not necessarily, there's not as many, and there's not as many good ones, I should say. So, but they're still there. They're always there. Just a question of how good they are or not. So, but that again will be Monday night. Monster Market Movers is the 25th. I'm assuming that's getting shifted to the 26th. Unless we're doing both, unless we're doing Monster Market Moves and Trading You on the 25th at 8. So I'm going to assume, again, just follow up on that if you're planning on being in either one of those classes. Then Mastering the Trade is June 1st. Of course, Mastermind groups are every Tuesday. The free online workshops coming up, Power Hour on Mondays. Trading Coaches Playbook, the one we're doing here, is every Friday at noon Eastern time. Market Mornings with Rob, obviously every morning at 8:30 Eastern time. And then the Key to Be Free is May 18th. And of course, the other ones, standard ones, Power Option Plays Tuesday and Saturday, Cover Call Explorers on Thursdays. And then Brandon's E-Mini Think Tank is Monday, Wednesday, and Thursday for futures trading. Awesome. Thank you, Lee. So if you haven't had Patterns in the Flash, as you know, with pretty much all of our stuff, you get a free 2-week trial. There's a link there in the chat box if you'd like to jump on that. If you haven't experienced that, I would suggest taking advantage of it. We'll cover a little bit more today, but and if you do have it and you've been in it, you've noticed there's a few little changes happening. So we're making some modifications to it right now. We're making some improvements. We're always improving things, but there were some ones that they've done quite a bit. So it's moved around a little bit if you haven't been in there. So just be prepared. but yeah, we're making some improvements and just making things a little bit better. So then, of course, you can follow everything on all the social media. And then is it? It's hard to find that? Okay. I will address that. There's a couple more things. I just noticed some of the other changes. And I will mention that, see if we can make that easier to find. So if you click on the flashcards when you get in there, because I just saw the tabs, there's flashcards, and then click on that and then scroll down. So it's a lot of it's just kind of moving things around and trying to create some the navigational buttons, putting them in a little bit better to make it easier to find. So I will mention that and see if maybe we can modify that and put that link on the front page. I'm assuming that's where you'd like to have it, right? On the very front page. So when you get in, because I think you've probably been through all the videos, right, Will? You probably don't watch those much anymore. It's just the pattern of the week. So, okay, no, that's good to know. Okay, good. So those improvements are good. I'm just modifying the pattern of the week. So again, I'm always looking for feedback, always looking to improve things. So when you guys let us know, then what it is you like, what you don't like, what you'd like to see, then we can make those modifications. So it's always good. So pattern of success, that is a live class I'll be doing. I believe it's June. Well, I can't remember exactly what the date is. Just keep your eyes out for it. I want to say June 22nd, if I remember right, 27th. I can't see my calendar. This thing's all hidden, and I don't want to hide it again because it gets annoying. So let's get to the subject of the day. Are you an analyst or are you a trader? Just a yes. I know what you mean. So what is an analyst? Okay, this is a little elementary, I know. Right, you just detail an examination of elements or structure of something. So you're just analyzing things. I say if you go look up analysis, it says the definition is analyzing things or something. Just goofy. It just seems so circular, right? But when it comes to the market that we're talking about here, right? We're talking about trading, obviously. There's essentially two different types of analyst categories, right? You're either a fundamental analyst or you're a technical analyst. There are some people that do both, right? But a lot of people, and the funny thing is when I started doing this 22 years ago, a lot of people made fun of us as technicians. I fell in love with charts right away. I saw the power of them. I saw the beauty of patterns and the consistent repetitive nature that they bring and the ability to predict what might happen next based on the pattern. So I fell in love with it. About a year and a half after that, when I went to get my broker's license, I go through a course and there was a guy there that had used to, he was in money management somehow. He worked at a big firm and we got into a debate about, which is better, fundamentals or technicals. And it was kind of fun, actually. I like to debate a little bit because we all like to be right, right? And I'm always right. So I always win the debate. I'm just kidding. Little humility, right? You trade the market for over 20 years, you'll get a little humility. Let's put it that way. The market will humble you. The market is humbling me today. Even more. But yeah, it was kind of funny because he didn't know anything about charts. And I've been using them and studying them hardcore for a year and a half. And but we got into this debate about, I drew just a channeling stock. I tried to keep it simple for him. And he said, well, what if you knew up here at the top that their sales are sinking? And then when it got down here to the support level, then you knew it was probably going to break that support level because their sales were dropping and their revenues were dropping and all this fundamental data. And he's making this argument. I'm like, okay, fine. Fair enough. Maybe I could do that. The fundamental research. How long is it going to take you to figure out that information? How much time will you have to spend? He's like, well, I don't know. Well, take a guess at it. Are you going to spend an hour? Are you going to spend 2 hours? Are you going to spend 4 days? How long will it take you to dig into the fundamental data and figure out that this maybe isn't a good buy? He's probably at least a day, maybe two. 2 is probably realistic. That's okay. So you're going to spend 2 days of research, dig through all the fundamentals, try to figure out all this stuff. And I'm going to spend 10 minutes looking at the chart, drawing the lines, creating a plan, saying, okay, I'm going to buy it here when it hits this level. And if it goes below that, I'm going to stop out and I'm going to exit the trade. Well, why don't you just do all Why would I spend 2 days? How much is it going to cost me? If I buy the stock here at $2 and it goes to $1.75 and I get out, and I do 1,000 shares, it costs me $250. Is it worth 2 days? I mean, $250 for 2 days worth of research. I'd rather just take a risk at the $250 and spend 10 minutes. It comes down to how much is your time worth. You know, if you're going to spend 2 full days, I'm just going to take a risk on it. And if it works out, then I make money. If it doesn't, it costs me $250. Which back then, $250 was, you know, a decent living. You can't get by on that. At least not in Seattle. $250 a day is poverty. Back then, it was decent, but anyway. So fundamentalists look at all these, right? The fundamental data. It was kind of funny to watch him kind of squirm when I said that. So, but it's funny because in the last 20 years, technical analysis has become much more mainstream. And you probably have seen that guy on TV that throws chairs or used to throw chairs. I think he hurt his back. So the entertainer guy. I remember years ago, I didn't watch him much. But one time I had him on for whatever reason. I think I was just watching CNBC and it stayed there. And he said, somebody emailed in asking about charts. Those charts, those things don't work. And like 2 or 3 years later, he's showing charts on certain stocks, bringing it up, looking at it. And it was kind of funny watching him trying to analyze it because he's a fundamental guy, right? So he didn't know the technicals. He doesn't know the patterns. He doesn't know sentiment indicators, any of that stuff. But it was kind of hilarious watching him try to explain it, use the jargon, and he had no clue what he was talking about. It was very obvious. So I kind of laughed, but anyway. So as technicians, right, we're looking at charts, we're looking for patterns, we're looking for sentiment. There's a whole bunch of different indicators we can look at, right? But most of it, pretty much all of it comes down to price. It all comes down to price realistically and volume, but the vast majority of it's price. So that's an analyst. Now what is a trader? Person who buys, sells goods, currency, or stocks, right? Or crypto. That's been crazy, huh? No surprise to me. In fact, I'm a little cranky. About 1 or 2 weeks ago, y'all know MSTR is MicroStrategy, the software firm. They were big back in the they were one of those that got hammered, right? I think they were out back in the late 90s, but they stayed alive. And they were at $800 or $900 just 6 months ago. And I read an article, I think it was a week or two ago, that they have either the founder, I don't know if he's the CEO, whatever he is, they have, as a company, bought up, I think it was $5.3 billion worth of Bitcoin. I don't know if they have other cryptos, but I would imagine they do. Maybe it's just Bitcoin, whatever it was. They have over $5 billion in holdings of Bitcoin. And they actually borrowed money. They were talking about, the reason the article was there is that they were talking about a margin call. That's what intrigued me. I thought you can't buy crypto on margin. Unless something's changed. I mean, you couldn't buy it on margin, you can't short it. So, which would be interesting. I don't know if that's true or not. For those of you that may be into crypto, and if you know that's true or not, let me know. Which it'll be interesting for sure, because if crypto continues to crash, it will certainly be a good study for shorting. Because a lot of people say, they argue against shorting and say it's bad, it makes the markets fall, but it also creates balance, right? Because like today, what we have, markets are up a bunch. Why? A lot of short covering. If you got short a week ago, you crushed it, and you're going to cover your shorts. So now the short covering actually creates buying pressure, which creates a move to the upside. It actually creates a relief to the dropping. So if things are just getting hammered and moving to the downside, and there's no shorting, and people just continue to sell, and nobody ever needs to buy it to cover their shorts, the falls become even more significant. So it'll be interesting how the whole thing plays out. And I think, again, I think that'll be interesting to study to see if Bitcoin how it reacts and how it does that. So, but you can't short it though, right? That's what I always have been told. But again, I don't know much about it. So just buy it direct. Yeah. Yeah, no, exactly, Gary. That's what I thank you for that. That's what I was getting at. Okay, thank you. I appreciate that. Gary says, no, you can't short Bitcoin. That's what I thought. I knew that was true. I just didn't know if they changed it. But yeah, exactly. They bought Bitcoin and then they used their Bitcoin position as collateral to borrow money to buy more. So if Bitcoin goes below 21,000, MicroStrategy is going to have a massive margin call. And I just noticed their stock in the last 3 weeks went from about $500. It hit 150 yesterday. Just got hammered because it's going to move in 10. I would imagine. I don't know what else, how much cash they have on the books, but I mean, $5.3 billion of Bitcoin is going to be a massive hit if they lose a lot or all of it. So are they traders? I don't know. Let me get back to the subject. I got a little off topic there. Can you tell I'm a little ADD? I find squirrels. Anyway. So if you're a fundamental trader, which you can do, I mean, I don't see the sense in it because traders typically are short term, but I guess if you're a longer term trader and you use fundamental analysis, right? You buy and sell. In other words, now you're executing trades. You're buying or selling. You're not just analyzing things. You're not just looking at them to see what they look like. You're not just comparing data to this and looking at the PE ratios, or you're actually making decisions. You're making buy and sell decisions based on that fundamental analysis. And you're setting your own rules, right? You're setting your exit and entry rules. As a technical trader, we're buying and selling based on chart patterns, what the technicals tell us, what the indicators tell us, what the price is doing. We also have to set entry and exit rules, same as a fundamental trader. So, what are the differences? There's really only one thing, and this is just a short version of it, but an analyst is neutral, right? If you're just analyzing a stock, you're just saying, here's what I see, right? You're basically picking the puzzle apart and saying, okay, let me make a new puzzle out of all these pieces. As a trader, you have to be biased. You have to pick a direction, right? You don't have to make a decision as an analyst as to, I mean, you might make a decision as to what direction you think it's going, or what you analyze what may take place next. But as a trader, you have to make a decision and say, my analysis says it's going this direction, therefore I have to take a position on it. These are the only two things they have in common, right? Analyst and trader, it's all data driven. There's a big one, right? As an analyst, you have no emotions involved, right? As a trader, when you're putting money on the line and have risk out there, it is hyper emotional. Is there anybody here that hasn't funded a trade yet, that is just still paper trading or practice trading? I'm just curious. If you are, then let me know. I'm just curious. But most of you, I'm imagining, I see a lot of very familiar names. I'm guessing that most of you, if not all of you, have funded to trade. So you know what I mean when I say, just analyzing the stock and looking at it doesn't really take any emotion. When you practice trading, there's not really any emotion in it. Once you put money on the line, it's a whole different ballgame, right? You become hyper emotional and you start to freak out and you hyperventilate, and you got that Costco size of paper bags to hyperventilate into. Your hands are all sweaty, your knees are twitching. Am I the only one? It doesn't take a lot of discipline to be an analyst. But to become a trader, it takes maximum discipline. You must absolutely 100% be super disciplined, right? And most big firms, if you look at the big trading firms, right, the hedge funds, the mutual funds, all those different trading firms, most of them, if not all of them, they have an analyst team and they have a trader team, right? One wears one hat and one wears the other. The analysts basically look at data. They look at technicals or fundamentals, whatever they're using. Some of them use both. I don't know if I should say a lot, but some use both. Right? They might use fundamental data for a long-term picture and then technical data for a short-term, which is actually not a bad idea. But they keep these two departments separate. You have the analysts over here that analyze things. Here's what's happening. Here's the PE. Here's the chart pattern. Here's the candlestick patterns. Here's what we think is going to happen. The traders over here who are executing trades, they're in a whole different mindset, right? Where they're actually placing the trades, but they're doing it based off of what the analyst says. So the analyst says, here's what we think. Now you make a decision whether to buy or sell and when to buy or sell. See, it may seem subtle, and for some of us, because essentially You're looking to say, which one do I need to be? And the reality is you have to be both. And sometimes we don't think of it like that, right? We just think we're traders. Well, we have two hats to wear. We're an analyst or we're a trader. And you have to be both, right? Sometimes when I'm just looking through charts, when the market's closed, I'm an analyst. When things are open, like they are now, I'm a trader. But I still have to continue to analyze things, obviously, right? So there's obviously some overlap. But you have to be both. And that is what makes it challenging is, you know, these big firms, they have separate. You have analysts, you have traders, and they don't commingle. So while the traders are still getting emotional and the analysts don't, they have some separation. We have to commingle those two and make them both work together. That is one of the challenges to being a trader is you and an analyst, you have to do both, right? You got to be able to recognize the patterns first. You got to know if they're strong or weak. And then you got to put your trader hat on. Once you've got a plan, you've got to know your entries and exits. You got to create a plan and execute the plan, right? And manage the trading plan. And the most important thing you got to do is that. Analysts, if you work at a firm and you're an analyst, you don't have to manage your emotions. You're not placing the trades. You're just analyzing things. As a trader, you got to manage your emotions in a big way. You got to be super disciplined and you got to manage your emotions. So that is where it gets tricky, especially as little independent traders like we are, right? You just sit at home by yourself and trade. You've got to fill both roles and you've got to constantly analyze and manage. And so it is a little bit, not a little bit, it's a lot more challenging. As you know, trading is very challenging. The beauty is, though, that once you get good at analyzing things, and then once you set your rules and you learn to manage your emotions from a trader's perspective, and then you start to mingle the two, it does take time, obviously, and it gets easier over time. And essentially, it becomes second nature. So you're just analyzing is just what you do. It's the executing the trades, managing the emotions that is the super challenging part, right? So, yep, that's what I thought. Now, let's go exercise some analysis. And if y'all have any tickers you want me to look at, we can go analyze the charts. We could, I suppose, place some trades if you wanted to, and do some paper trades if there's something there. Let's look at ABBV. Actually, I wonder where it's at in real time. Actually, I just think I got hit. Yeah, I did. NVIDIA, okay. I'm gonna, give me a minute, Kevin. I'm gonna do this one. This is what I just before we started, I threw an order out for this thing and just a little bit inside the spread. And I figured if it ticked up, it would hit, and it did right before I get started. I just took a small position. I didn't take a big one. I figure if it's gonna drop a lot, then great. Because I'm already pretty heavy on the downside. So I don't want to get too overloaded because I am. It's been a great week until today. All right. I'm giving a bunch back today, which I knew was a possibility. I figured, well, if the market tanks one more day, then I'm in good shape. I'm in great shape and I'll clear out. If it bounces, if it gaps open and rallies a bunch, I'm going to take a beating. But it's been such a spectacular week. I'm still up for the week, so I don't really care. I mean, I do care. I shouldn't say that. I'm just not too concerned about it. So there is ABBV. And if we look, this long term, that was an all-time high. And even though we don't have a, oh, okay, there's monthly. I don't want to go that far back. This is not really a head and shoulders, not a good one. I wouldn't call it a head and shoulders, but it has a similar type of pattern to it. Excuse me. I mean, ideally, you want to see a nice, well-defined left shoulder and a nice, well-defined right shoulder, but there's just little tiny blips that really don't mean much. But we also did crack that 155 level. So I'm looking at it saying, and then also analyzing the candles, right? We got this big gap down on earnings. So obviously people were expecting ABBV to do really well. And they rallied it all the way up to almost 175. And then it turned over and tanked, dropped to 150. And then earnings came out and it gapped down big time. And over the last couple of weeks, we've rallied back up. We closed that window. And when you look at the candles, from the last, well, these 3 days here, you got the big shout. So the bulls are trying to run it back up and they can't. 3 days, they run it back up to this 153. The next 2 days, they run it up to 155. They hit that old support level. And both days they sold off. So both days the bulls pushed it up there, but the bears came in and said, nah, we're going to win. Right. And they pushed it back down. And then yesterday, it was down in the morning. I thought about pulling the trigger. I went, no, I'm going to wait. And sure enough, I'm glad I did. Because it rallied back up there and closed at the high. And then this morning, of course, it gaps down, even though the market was up. The market gapped up a bunch, right? The overall market, and a lot of stocks did too. This thing actually gapped down a little bit. So if the overall market rolls back over, which I expect it to do at some point, it may take this thing with it. And that's the hope, obviously. If you're getting bearish, which we're going to do right now. Where did the intraday chart go? Let's see what it looks like still. And we move that to 5 minutes. That's on a daily. It's starting to roll over a little bit. We detach and pull the option chain over. We'll take a look at it. So the question becomes, again, this is a practice trade. I understand it's a paper trade. That's all we show for regulatory reasons. So here's the question is, where do we expect to target? I mean, where do we expect it to go? We're looking for a target of 146, but in reality, it could drop all the way down here to about 135. I'm not going to plan for that. I wouldn't be surprised. The momentum and the rally to the upside is pretty significant. So I wouldn't be surprised to see another pop to the upside or just a sideways move. So I don't know that it's going to crash big time like the market has been, but who knows, right? You don't know. So you prepare for both sides, right? If it takes off to the upside, we've got to stop at 155.26. If it gets above that line, it's probably going to make another rally to the upside. I don't want to be there. So I'll take my loss, take my beating and go. If it does roll down, then the target's about 146. But if it crashes right through that, then I want to be prepared for that too. So I would peel some off as it falls. And then if it gets down to this level, I might leave a little bit there. And if it continues to fall, then great. I might even add to it. If it breaks that 146 level, might even add it back into it, looking for it to come down to 136. Just thinking things through, right? And it's always a good thing to have in your mind different scenarios that could come up that might take place so that you're prepared for it when it does. And then you can take advantage, because it's when you got a whole bunch of trades on and you don't think things through and you don't think it ahead, then all of a sudden it happens. You're like, oh, what do I do now? Now you got to think of it in the process and the bullets are flying, and it's a lot harder to make a good solid decision. If you plan it out in your mind, mentally, visually, even write it down. Some people suggest writing it down. And that's not a bad idea. I've tried that in the past and I just lose my notes, or so I've just learned to remember, okay, Abby B, if it rolls down, I'll just be jockeying in or out, whatever the case is. So, but let's see, where did options go? No, I just opened it up. There it is. So if the target's 146, then the question becomes, do you go short-term, or do you go short-term in the money, or do you go longer-term out of the money? And that, of course, is based on your analysis. So we take the analysis we do and make a trading decision based off of that. August is about 100 days out. That's what, 2.5 months. Now, typically, and for those of you that are in that have patterns in a flash, and you've seen the pattern of the week, the last few weeks I've talked about going out of the money. Typically, when I buy out of the money options, I look for the target. So in this case, I'd be looking at like the 145s, maybe the 150s, but they're pretty close to at the money. So I'll go out of the money, and typically I would go 4 to 6 months out. With the way this market's been moving, I've shortened that time frame just a little bit. The shortest I would go is 2 months, but 3 months is typically pretty good. Because if it moves down like things have been moving and it continues to tank, then you don't need as much time. When things settle down a little bit and they stop dropping as fast as they are, if I should say, at some point they will, then I will move back to at least 4 months of time if I'm trading out of the money. And with the way things have been moving, that's most of what I've been doing is out of the money. So the 145s are an option for August. They're 550 by 5. Spread's not bad. Open interest. Delta's about 35. Usually when I'm going out of the money, I'm looking for 25 to 35 delta. That's ideal. So if this thing moves in, say, 2 weeks, and when I go out of the money, and this is one of the reasons I do it, is what's the most expensive time premium there is on an option chain? The at the monies, right? And the out of monies are relatively cheap. So if you buy it, the time value when it's relatively cheap, and it goes and hits at the money where the time value is at its maximum, if you're buying it when it's inexpensive and selling it when it's most expensive, you get the delta flip, you get the vol, you get everything about the good parts of it, right? You're selling it at its peak, buying it when it's low. Buy low, sell high, right? And then if it does tank even more, let's say you get out of your position or part of your position and then it continues to bleed, then you go in the money and now it gets even better, right? That happened with Alcoa last week, I think it was. It was beautiful. I had scaled out of part of it as it went, and then it just kept on going. And then it finally got to at the money. And I went, yeah, I think it's gonna be, and it kept going. I was about 4 or 5 points in the money by the time I finally closed it out. So it was nice. So August is about 2.5 to 3 months, which is about right. And actually, I don't mind that. I think the 145 is good. There's plenty of open interest. The delta's about 34. Where's the stock at now? It's 153.44. So it's a little bit. 53.40. So it's down a little bit from where it was. Where'd that chart go? Oh, yeah, it's popping. Now, this is a 5-minute chart. Am I going to freak out because of this? No, because the options aren't going to change that much. But let's go grab some of these. What I said, 145s, 560, 540. You know, I'm going to put it at 550. And that's not, if it, and here's the beautiful thing too, is if this thing stops us out, it's at 153.50. It's a $2 move. That's going to cost about 70 cents from the delta, 20 cents a slippage. So it's going to cost about 90 cents. So we'll see if this thing hits at 550. It is a paper trade. I don't know if it will or not. And it's weird. There's some of these, what was it? What's it? Well, BX. I'm trading BX, and I put an order in, and the spread's like 20 cents. I put it right in the middle, and they didn't take it. It's like, what's wrong with you people? I mean, it was a fair price. That's what's happening here. They're not, of course, again, this is a paper trade. If it was a funded trade, they may have hit it. So yeah, see, it shows on there. And honestly, I'm not going to worry about a dime. I'm going to go, and I'm just going to change this to the 560. I mean, it's nice to get it if they'll take it, but just triggered. Yeah, hit it at 560. So we just got filled there at 560 on 10 contracts. So we shall see what happens and keep an eye out for it. And if it crosses above that line, then we'll get out. It'll cost us 900, 1,000, maybe, you know, worst case scenario, probably 12 or 1,500 bucks, but it's not considering we have, well, if it drops 3 points, we're going to make about, how much is that? About $1 a contract or more? I don't know what the math is. I'm not worried about it. We're looking at NVIDIA now. Well, what pattern is there? A lot of these patterns happen today. Question is, will they keep up and will they continue to play out? And we'll see what the volume looks like. Just looking to see what's happening real quick. I don't have those you can see, that's the machine behind me is my trading machine, right? All I do, it's purely for trading. I don't do emails. I don't do business. I don't do anything on that machine except for trade. That's just purely dedicated for that. So that's where my funded account sits. That's where I trade. So I just wheel around and go back there, and then anything else, email, business stuff, I do, coaching, I do on this machine here. So I don't even have Omega charts on that machine. So what do we see with NVIDIA? You all should see that candle pattern right away. It's pretty obvious, right? A morning star, which it bodes well for the bullish argument, that's for sure, because that is a very clean, very nice, beautiful looking morning star. And it is coming in at a support level, which is even more significant. It's not a monster support level, but it's pretty solid. So from an analyst standpoint, NVIDIA well, here's the hard part. Okay, as an analyst standpoint, this thing said it's probably going to run north. from what it shows right now, right? Now we're still only 3 hours into the market. We still got a half a day to go. This thing could roll over and turn back down. And if it does, then yeah, it's not bullish anymore. If it closes about where it is today, or where it is right now, because I did update this at 8:35. We had 2 hours. Let's do a quick update on it anyway. It doesn't take that long. Won't be criteria. See if it's changed or not. I think I should have that on a list here somewhere. I don't know if it's on one of these. No values, put those in order. Yeah, I do have it here. Let's look at an intraday chart. There is NVIDIA, and it is still running, right? 178.48. And that's a lot of volume. This is a 5-minute chart. A lot of volume coming into it to push it higher. Will it sustain it is the question. Yeah, we just had a pretty decent chunk of volume come in here for this last little push to the upside, which you can see one of two ways. Either it's, it's a retail, it may be retail traders coming in, and thinking that this thing's going to keep going, so they're piling in. If it's retail traders, if it's not institutional traders, then we're probably going to form a peak here. But who knows? And how do you know if that is or not? You don't, not until the end of the day. So, but they were getting an update, and it's at, what was that, 177 something. So yeah, if we close here, then we have a beautiful morning dojo star. Yeah, it's up even more. Yeah, I just noticed that too. The earnings button there, it does say the 25th. So that is the hard part. That's 12 days. And here's the other part about this. And actually, this isn't, let me move this out of the way. Actually, I'm glad you brought this up, because this might be a good one. See the evening star right here? This is why I like patterns. Now, they don't often play out this beautifully, but if this morning star plays out like this evening star did, I don't think that's going to happen myself, but who knows? But this is definitely a very, very beautiful morning star. Here's where it gets tricky as a trader, right? Analyst wise, this is very nice. Let's see what indicators look like, which is no surprise. Stokes are way down, MACD's way down. I don't put a whole lot of emphasis on these. They're not really telling us much. It's really oversold. Surprise. You can look at the price and see that it's oversold, right? So look at the price first. 95% of my decision comes off the price chart. These things right here, Stokes, MACD, moving averages, Bollinger Bands, moving averages, they're all derivatives of price, right? They're mathematical formulas based on the price chart. You want the most pure, up-to-date, accurate, legitimate indicator, it is price. 95% of it's price. But if this thing rallies above that, what's about 180 or so, then we very well could have not only a short covering rally, but a good momentum pop all the way up to about, looks like about 212. Now, maybe about 200. It did stop here, and there's some definitely some support there. I'm going to just round that off to 200. I'm going to make it a small dash. It's not a super heavy support, but definitely there. So from an analysis standpoint, if we're analyzing this, beautiful morning star from a support level, rally today. We've got pretty solid volume up to this point. And I would imagine that will probably continue. If we have a big, big bullish day and it continues, then now the question becomes, where do you think it may go? How far, how fast? And I wouldn't be surprised if this thing breaks 180 to see it go to at least 200, maybe 212. So now we're going to put on the trader hat and flip that over. Where do we get into it? So we're going to have some rules, set a plan, right? I keep this very, very simple. You find a pattern, analyze it. What do you think it's going to do? Okay, we think NVIDIA is going up. I actually do think NVIDIA is going up, and we might trade this. We'll see. So first thing I do is look at a stop. The question is always at what point, based on your analysis and what the support and resistance level is, the pattern, strong pattern, weak pattern. Once you've done all that analysis and you determine, okay, you determine, I think it's going higher from here. If I do get into this trade, at what point, if it turns over and goes against me, at what point do I no longer believe in my original analysis? At what point is my analysis possibly wrong? Or not necessarily wrong. I guess analysis isn't really wrong. Analysis is looking at what the chart's telling us. But at what point, I guess if we flip the trader hat, I never really distinguished between that, but if we flip the trader hat, trader says, okay, here's my, the analyst says, here's my analysis. Trader says, okay, if I'm getting into trade, at what point does my analysis fall apart? I analyzed it. Now I'm trading it. When does the analysis that I originally had change? So the question becomes, if it gets above 180, at what point, if it rolls back over, do I get out? At what point do I set a stop and say, okay, the analysis isn't working the way I expected it to. I got to get out of the way because I don't want to get hammered. And I would put it at 178, just below that there. In fact, I'd move that maybe just a tad bit below there, 177.50. No round numbers, right? So then where's the target? So now I know where I'm getting out. If I get in and it turns around and it doesn't work out, where am I getting out? There. Now where's the target? I'm going to actually put it up here. I'm going to go right off the low of that candle right there, 206.20. And here's another point that is important to understand about these types of rallies that we have here. And I took advantage of it yesterday on Apple. When stocks get hammered like this, and this is going, if we go back to the Bitcoin conversation we were having just a bit ago, if you can't short Bitcoin, there's nobody that's coming in to close their short positions, right? Stocks are different. You can short a stock. If you shorted the stock at 250 and it's now at 160, what are you going to be doing? You're probably going to cover your shorts, right? You made a huge profit. Things got hammered. You've made a bunch of money. Now you come in and cover your shorts. And what does that do? When you cover your shorts, you have to buy. That creates buying pressure. That's part of the reason we're seeing this massive rally today. Because a lot of people that have been short this last week, I mean, it's still going. People have gotten hammered. I mean, the shorts have made a bunch of money and they're coming in saying, I'm taking my profit, which makes sense. Interesting. I'm not sure that you just threw me for a loop, Gary. I'm like, I'm trying to think this through. I'm like, wait a minute, how does that work? He says you can sell your Bitcoin to cover your stock shorts. Okay, that's going to have to roll around in here for a little bit to see it. Maybe I'm just not. Again, I don't know Bitcoin that well, but I guess if you sell your Bitcoin. Okay, let me think on that for a little bit. That's weird. Usually that kind of set me back. I'm like, whoa, maybe it's just I don't understand Bitcoin enough. And honestly, I don't really care to. I got enough on my hands managing my emotions to trade stock, right? I don't need to go and deal with all the Bitcoin stuff. So, but I would definitely trade it short term. And that's one of the reasons. That's probably one of the biggest reasons that I have steered away from Bitcoin, because you couldn't and still can't short it. So, and I've been bearish on the market for over a year. I've been expecting this drop, and a lot of stocks, I mean, did really well in a lot of stocks last year. The ones that started to drop was already shorting them and not shorting them, but buying puts, intraday shorting them, because I've expected the market to drop. The overall market stayed up because of the big guys, right? And now it's starting to crack. So, yeah, I guess that's a good way to think of it. Bitcoin is a foreign currency, or I mean, any currency, it's kind of a currency in itself. So I like the concept of Bitcoin, the idea of decentralized currency and not, having governments, being out of it. I definitely like the concept of it. I just see it as a true fiat currency. I mean, a lot of people, refer to the US dollar as fiat currency, but it's not a true fiat because the government has the ability to tax people, right? And collect revenue that way to pay the bills. Bitcoin, there's really, truly nothing. What is a Bitcoin? I mean, that's the part that I've always struggled with. Like, okay, it's a mathematical algorithm and it's a digital coin, but there's nothing physical. There's no physical asset there. It's just an idea. So, and I mean, it's cool if it works. I just don't know that it's going to long term, because it's a true fiat currency. It's just purely based on an idea. So, and unless I may be completely off my rocker. Nobody's shown me anything real and tangible that is there. So I've been skeptical from pretty much day one. So, and like I say, I love the concept. The idea of it is beautiful. I think it's awesome. I'd love to have that. But so I'm going to bust out the calculator. This is inside patterns in a flash. And I like they changed the header too. It's a little smaller, takes up less real estate, which I like. So now okay, we've got our analyst hat off. We're on to trader and we've got our stop in place, 177.50. So if it breaks up, we get in the trade and it rolls back over, we're getting out. We stop out, we take our hit and move on. Target's at 206.20. So now we just take those two pieces of information, put the stop at 177.50, and the entry point's easy. It's just pure math. Right? And if you haven't, whoops, put the wrong number. If you haven't had patterns and flag, let me show you. I'm going to put this on here and I'll show you exactly what you should do. Two things. Thank you, Lee. Lee just put the link in there again. So the entry point for this is 184.68. Now, here's why that is. The risk reward calculator is for 3 to 1. So if you have a 3 to 1 risk reward ratio, the odds are on your side in a big way. I know many of you have seen this, right? And if you just think about it mathematically, I'm going to make it simple here and then show you where you can go see it is. If you have $3 of upside, right? You have $1 risk. Say you do 4 trades. You do 4 trades. One of them goes in your favor, 3 go against you. You lost $1 on 3 trades, you've lost $3. On 1 trade, you made $3. So you've lost $3, you've made $3. You broke even, right? Who cares if you break even? We're not here to break even, right? We're here to make a profit. But statistically, you did 4 trades, you were right once and you were wrong 3 times, right? So 1 worked out, 3 didn't work out. Your batting average is 1 for 4. You were only right 1 out of 4 trades. That's 25%. And yet you're break even. So if you're right 1.25% of the time, or if your batting average is 260, 270, 280, if you're right 30% of the time, then just statistically you come out ahead, right? As long as you stick to 3 to 1 risk reward. And you can see here on the calculator, you've got $7.18 of risk, right? And this is based on the stock price. And you got $21.50 of upside. You equate that to options, you've got, whatever the numbers calculate, depends on which option you buy, right? That's why we do it on math, on the stock, because the math is easy and you just have to adjust it for which option you buy. So if you haven't seen risk reward and why it's super important, then get the trial for patterns in the flash, go into the bonus section right here and watch this video. Go do that first. If I just blew your mind because you're going risk reward, that doesn't make any sense. Go watch this video. I go in depth. I think it's 10 or 15 minutes long. I can't remember, but I show it and why it's important and why it's so powerful. Not only from a numbers and a statistical perspective, but what's the last most important thing we have to do as traders? Manage this. When you start utilizing this, first of all, when you realize it, you go, wait a minute, I don't have to be right. Because when I started 22 years ago, I was in this mindset that I had to be right more than half the time. I had to pick the right direction at least 50% of the time, or I can't make a profit. And nothing could be further from the truth. You can be 28, 29, 30% right and still make a profit. You don't have to be right. All you have to do is let the winners run. Get big, big winners, and a handful of losers. Small little losers are no big deal. You make $5 on 1 trade and lose $2 on 3 others total, you're still up. Yet you're only hitting 25%. So if you haven't seen that, go do that. The other thing I would say, if you're new to technical analysis, even if you're not new to technical analysis, go get the trial and do the quizzes. There's 4 different quizzes in here. There's basics of candlesticks, and then patterns, candles that or quizzes that handle that go through different patterns. If you're not sure where you're at from a knowledge perspective or experience or what you need to know, if you know enough from a technical perspective, get the trial. You have 2 full weeks. Go in and take these quizzes. There's, I think between all 4 of them, there's about 30 questions or so, and they really don't take that long. I mean, that's what it looks like, right? You just click the one you think that is the answer, then hit submit, and it'll tell you right away what your results are, whether you passed, what your percentage is. So like I say, whether you're brand new or not, go in and take it. test your knowledge, right? See where you're at. And if you don't ace the test, then keep patterns in a flash. If you do ace the test, then cancel your trial, right? So anyway, so there's a video. So now we've done an analysis and we've put our trader hat on, created a trading plan, and now we just sit back and wait and let it play out. Except here's the hard part is earnings comes out next week, which may or may not matter, because you can see here with NVIDIA is a super volatile stock. And honestly, I'm a little cranky. I got out because I had puts on this thing and got out. I rode part of this. I can't remember where I got into it, but I rode part of this down and then had jockeyed in and out and then got into some more positions in here. And then I think it stopped me out. I can't remember. I had the plan on here, but no, I played this crack. That's what it was. It was this drop right here. When it cracked that 212 level, because I'm looking at the support, this is what I played right here, and then got out of it somewhere in here, and wish I would have held on because it dropped big time. So I got it with a mediocre profit. It wasn't spectacular. So it was a nice drop, but I gave some of it back. So, but you'll notice here when it rallies, when it bounced at 212, we went 212 to 287, 70 points, which is about 30%. So this little 184 to 206, that could happen in a day or two pretty easily if the shorts continue to buy it. That makes sense? Let's see where's that. Uh-oh. But there's the hard part. This is NVIDIA. That could be good. Yeah. Good. That's where it gets tricky. I have a couple orders in to get out of a couple of things. But I figured we would probably roll over at some point today. I don't expect this rally to keep up. Just don't. And you can see, I mean, look at this live and in real time, right? Now we're analyzing and trading. We're not actually trading this, but and look at the volume increasing too, which is a huge sign, obviously, that we may have peaked out on this thing, on NVIDIA, at least right now. Yeah, that's not really there. And here's the beauty. This is one of the things of, I see a lot of new names in here. When it comes to technical analysis, and this is one reason I love charts, is I don't care what type of trading you're doing, whether you're trading options or futures or Bitcoin, crypto, it does not matter what instrument you are trading. There's one thing that's universal, and that's charting. And the patterns are nothing more than a visual representation of what traders are feeling about that particular stock at that particular moment, right? And the patterns give us a predictable, consistent way to see. When you look at a symmetrical triangle, what does it tell us from an emotional or sentiment standpoint? A symmetrical triangle is an indication that the market is resting, right? Typically, it's market's been running up, right? And I'll give you an example of it, actually. One that I think this was a pattern of the week, if I remember right. I'm pretty sure it was. Whoops, that's not it. JNPR, Juniper. This is one I just thought of, a symmetrical triangle that Will, you'll tell me if it was or not. I think it was. I can't keep it all straight. I'm pretty sure I did this as a pattern of the week back when the pattern was forming, right? So I was probably looking at it right in here. Well, it would have had the second one there if we go to line charts. You can see that it's forming. And I highlighted it as the pattern of the week. And then you put the measure move on it, which is the base. And there's a few different places you can go. I can usually go a little more conservative. And then I know there was a trading plan on here, and then it finally broke to the outside. And the expectation is for it to move about this amount, the base, whatever it was. Looks like I went a little bit. I probably went inside here, went a little more conservative. This is the beauty of patterns. Symmetrical triangle, it breaks out, it goes up and hits the target and then rolls over and falls completely. That is why we do patterns. This is why I love patterns, because this is not a one-off. This happens all the time, but this is a symmetrical triangle where basically, and that's what I was getting at, is we've got this trend in place. It rallied a little bit here. It's had a nice little pop, and then the market's just resting. It's taking a break. Going, hey, you know what? We've run a long ways. We were $22 just 6 months ago. Now we're at 35. That's a big jump. That's what 50, 60% move. We got to catch our breath. We're tired. So it catches its breath for a couple of months. And then when it decides to, and it says, hey, we're ready to keep going, let's go. Boom, it breaks out of the upper end of the triangle. And it typically will run about what that base is. Another one that loves to do it. This is one that I don't know if I don't even think it's still on there. I doubt it is. Whoops. There's actually several on here. I mean, you could go here. Oh, that's not what I wanted. I don't want that on. I want the dollar sign one. That one's not super pretty, but it's there. There's that one. The one I'm thinking of, I think, is this one. But you see, I mean, still this one broke out and it did a little role reversal, 120. It ran to 137 in a couple of weeks after that. This one here, same thing. We've got a symmetrical triangle forms. We're looking at 119 to 135. It's about a 15-point move. So it breaks out of 130, runs to 150, goes a little bit further. Whole market's pulling at lunch break. Yeah, here's another one. Here's Peloton. Here's Peloton. You want to know that Peloton's peaked out? There's a beautiful, beautiful textbook head and shoulders right there. I played this move. I wish I would have bought leaps, but how do you know, right? I mean, because this thing was at 150. I remember it was 145 or 148. I think it was right around 150 when I bought puts on it. And I only bought short-term ones and took advantage of this move, at least a part of it. I don't know how much, I can't remember how much of it I caught, but I caught a good portion of it. These are patterns that show up all the time. There's another one kind of right here. There's all kinds of patterns. They're just everywhere. So learning to recognize them is the key, right? You got to be able to, and that's where you start with the analysis, right? You learn to recognize the pattern, then you learn what to do with it. And then you learn how to trade it, right? And then you put risk reward to it. You put a trading plan in place. Like this, there's the pattern. It's out of support. Beautiful. Everything about this is beautiful, depending on how it closes out today. That's going to make a big, big change. Where is it? Yeah, it dropped off. Big volume on the drop off. Oh, this is what I was getting at. I lost my way a little bit. Squirrel. More coffee. That'll help the ADD. Is that it doesn't matter what instrument you trade. Technical analysis is the core of all of it. Analyzing the charts and being able to understand what is happening with the charts and what's taking place and what may happen next is critical to anything you trade. And the beauty is, as you can see on the screen, we're looking at a 5-minute chart. And the beauty is that I don't care what time frame you trade on. If you're a long-term trader and you want to trade with the weekly chart, have at it. The patterns still apply. You want to day trade and trade off a 1 minute or a 5 minute or 15-minute chart, the patterns are still there and they still apply. Double bottom. Yesterday on Apple, double bottom. That was fun. $1,100 in 12 minutes. It just went, boom. Nice little double bottom. Boom, boom, boom. Nice little day trade. That's what understanding and being able to recognize the patterns and knowing how to take advantage of them can do for you. That is why I love patterns. It's why that's the only thing I do. I mean, I understand options. I don't understand futures. And I played with them a little bit a long time ago. I played with currencies. I played with all the different instruments for the most part, except for crypto. And the funny thing is every single one of them, the only thing you have to learn is how that instrument trades. But once again, every single instrument, every single time frame you trade on has one thing at its core, and that is charts and analyzing the charts and the patterns that are there in the charts. You go watch future stuff with Brandon, he's going to talk about charts. You got to understand charts. You go do option stuff with Rob, you're going to have to understand charts. I just focus on patterns and analysis and setting up trades. You trade whatever instrument you want. You trade whatever time frame you want. But if you want to learn the patterns, you want to be able to recognize them and see them and understand what to do with them, then absolutely get this. Because you got the flashcards are the training tool, right? You all use flashcards as a kid. This helps you recognize the patterns, right? So you can click on these. You want to see a symmetrical triangle. You want to train your eyes to see them, just click on the symmetrical triangle link. The internet's a little slow today, but I think it's this machine actually, because I get on that machine and it's super fast. So they're just flashcards. All I do is, just like when you use flashcards as a kid, right? 2 + 2 is 4. It's just a training mechanism. Just a training mechanism. So go use those. And then you got videos. There's over 8 hours of video in here. You already saw the bonuses. The videos here cover each individual pattern plus the foundational stuff. So if you're new to technical analysis, even if you're not new, go watch this. Met a guy years ago, probably 15 years ago. He'd been to 8 workshops. I asked him to define a trend in 4 words, the most basic thing that we as technical analysts need to understand. And he couldn't do it. And I said, you need to get back to the basics. The core is what's important. We're getting there, Will. That's some of the changes we're making. We're going to start adding, we're making improvements to it. We're adding, I'm going to add a bunch of flashcards to it, trying to get to where it can add them over time as well. So yeah, I'm glad to hear you're still using the flashcards. That's good. So yeah, these videos cover all the different, there's the basics of candlesticks, and then you get into patterns. You go learn the symmetrical triangle. You want to know how it trades? Click on this link. It'll bring up a video, and I go into that particular pattern. Get in depth into it. What are we looking for? What's all the criteria? What makes it stronger? What makes it weaker? And then we look at an actual example. And then at the end, this is something that I never got from the books when I started and learned, is where do you enter the trade? Where might you get in based on your trading style? Are you conservative, or are you, I'll just leave it. If you're aggressive trader, if you're conservative trader, where do you get in? I never read that in the books when I started. Because when I started, that's all we had was books. We didn't have the ability to do this, right? The internet was in its infancy. So anyway, so go grab the trial, take the quizzes, see how you do. Get in here, watch the videos. You got 2 full weeks. Join me Monday night. That will also, even if you have the trial, if you don't pay for it today, you can still join me on Monday night in the live class that I do that is exclusive to Patterns of Flash subscribers. So if you have an active subscription, you can come join me Monday night, have another hour. We'll go through stuff. If you have any questions, you want to look at particular stocks and analyze them, look at it in video like we are today. That's what we're going to do for an hour, just like we did today. So, all right. Thank you, Lee. Appreciate it. That link is there for you to get the trial. Yeah, there it is again. I appreciate it. Thank you all for coming out and having some fun. Thanks, Will. Appreciate that. All right. Y'all have a wonderful day. God bless. Bye-bye.